Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market continued its rise last week in what was really mostly a mixed week, as bulls targeted new highs for the stock market, major indexes especially, and moving up to infinity and beyond. The FOMC minute showed a mostly extreme dovishness, and that did help the market, though a dip did come midweek as the president threatened to open a new front in the trade war, attacking the Eurozone, and the IMF came out and talked about Eurozone growth stalling again. But that Fed news pumped more juice into the bulls, and even with a PPI that jumps up 0.6%, it didn't seem scary at all, and the Fed certainly continues to help the markets. Talk about juicing. Friday, the markets moved up again as more and more China ease seems to be affecting these equity markets. They're doing extreme ease in China, and their lending absolutely exploding. Their recent stimulus was around $700 billion when you convert it from yuan, and that is not only juicing China, but also doing the same thing to the rest of the world. We're coming into earnings season right now, and JPM led the banks off with good earnings, and guidance overall for this quarter has been relatively soft. So that does kind of set up better performance in earnings. And what we saw in the JP Morgan action is it got a lift after earnings. We're really expecting more of that in this early season for earnings right now. That action is likely, at least for the next couple of weeks, still positive for the markets. The stock market technically misses every opportunity to tick down. Every window of corrective periods that we see in our analysis only brings maybe minor downticks, and every opportunity for positive market, well, it doesn't miss at all as the markets continue to stair-step their way upward with nary any decline at all. That's the definition of an uptrend or positive momentum when they don't tick down very much and they do continue to tick up. This is the condition that we live in the stock market right now. We analyzed the big picture of the stock market this week. We put that video out on Thursday, and I do that basically on about a quarterly basis. The last time I had done that back towards the end of last December, we had a negative opinion. We believed that the market was going to rebound in the first 2 or 3 months of the year, but that it would stall out and then be moving pretty sharply to the downside again. But now we have this extreme strength, and as the massive liquidity from all over the world really has changed that picture. So it's really, I think, important, if you're especially a technician or a student of market cycles, that you take a look at that video in our big picture analysis. The intermediate patterns still are in alignment for a correction into May, and we're still looking for a pretty good down swoon to come. But then the longer term picture getting out into the fall is better than we had given it credit for originally. So I think you're going to find that analysis quite interesting. But with the central bank madness that's going on all over the world, and you'll see in our projections that, somewhere down the line here, we have it projected and will very likely come the time period when the piper gets paid. And for all of the extreme stimulus, with the extreme over-ledgering that's going on, it's very, very likely that this unwinds at some point, and I meant to say leveraging, the extreme leveraging going on right now, the unwinding of that leveraging or unleveraging is coming, down the road, and it could set up for a bear market that lasts, for a significantly long period of time. But you'll see in our analysis when you look at that we think that outside of a mid-year or springtime correction in here, the patterns are setting up better now, extremely better than they were before. In the short-term view, we're going to show you that as far as the very, very near term, we kind of think we're in a last gasp right now before this corrective period gets hit, and that's going to maybe open up a brief opportunity. When I say brief, maybe a month or so time period where the bears will finally get paid, but it's going to be probably a relatively small window of time. Let's take a look at what happened in the stock market over this last week, and you can see and hear that the market did better in the second half of the week. We actually had projected that kind of a pattern. China, the discussion here about China trade, the meeting wrapped up and they said there were progress, but fighting in Libya lifted oil, and oil has been getting a lift from that and from sanctions, and that helped the market get a little bit of a boost in here. There were downgrades here in GE, Boeing, and Starbucks, and that's what led the market down on the opening here on Monday. But then you could see buying all day long really there on Monday. Here's where the president threatened the Eurozone on tariffs, and he was really focusing on the Airbus subsidies, which make Airbus much more competitive with Boeing than it would be without government money, and that sent the market down. So this was your big down moment of the week that you could see right in here, and that lasted about 6 hours, and then the market started to rebound late in the day, and that was basically it. You had a down day on Thursday, but that couldn't stay much on the downside. IMF downgrades growth here on Wednesday. CPI comes out plus 0.4, but the core only 0.1 to the plus side. And here's the ECB news came out, and they held rates, and they're also in super dovish position. And they're talking about giving a lot of relief to the banks by doing a tiered structure on their rates, take some of the heat off of the banks, which are suffering from the negative interest rate policy there. FOMC minutes comes out here. The market was kind of dull here on Wednesday till that came out. Still concerns on world growth. They see no rate hike basically through all of 19. That's most of them, but a few of them said they were going to be flexible. So big deal, right? Goldman Sachs comes out and says, you can see right here on Friday that they don't see a rate increase until late in 2020. Here on Thursday, PPI up 0.6%, year over year up 2.2%. So here's the discussion about the Fed mandate. I'm going to bring more about this later. The Fed's mandate is for a solid growth, consistent growth, and stable prices. So they're targeting 2.2%. Doesn't stable prices mean you don't have deflation? This ridiculous number of 2.2% they're targeting, well, they basically have it, but they're in super dovish condition. Man, this is going to go down in history books as the wildest time. So we have this break here on Thursday, and that market, of course, gets the lift here on the close here on late on Thursday. And then the China lending surge news comes out, gives the market a big lift over here on top of the fact that CVX comes out and says that they are buying ABC. We're going to look APC and Anadarko. We're going to look at that, and there's a competitive bid supposedly out there from Occidental Petroleum, so we're going to take a peek at those. And Goldman is super dovish also here on interest rates. And then right over here you see this downswell right there. Well, Netflix gets hit on Disney news. They're coming out with a $6.99 monthly for their new streaming service, which is very competitive, but it's mostly kid stuff. And Apple falls on another downgrade. So downgrading from analysts is getting to be a habit here on Apple. That got the market, falling here early in the day on Friday, but here at midday you can see it's made its recovery back there, and the market overall is still looking incredibly solid. So that's the 60-minute chart of the S&P 500. You can see it's really interesting to look at that, see what happens overnight. Really gives you a good sense for what's been moving the market around, and there has been this week very few big gaps overnight, but last couple of weeks we've had some very significant ones. For the week, stocks, we're going to call them mixed. S&P 500, NASDAQ up a little less than 1%. The Russell about unchanged in the week, and the Dow down small, still suffering from Boeing and Boeing downgrades, which are hurting it. Bond market falls about 1 point, and there's a little minor breakdown in there that may be significant. We'll look at that in the short-term view also. 10-year yields up about 4 basis points, and we're going to call this relief. How do you spell relief? You spell it a positive yield curve, where the 3-month to 10-year is now out to about 8 basis points, and that really is giving a lot of relief to funds who were in a position where a lot of them had to bail based on the inversion. And while we still have an inversion way in the short end, this steeper yield curve out to the 10-year is a better condition for sentiment, that's for sure. Gold market, not much change in there. Gold down about $1 at this point. It's really underperforming the dollar, which had a pretty negative week, falling about 0.5%. The oil market continues to gain on this Libya fighting and Iran-Venezuela sanctions, and that's really getting some competition though now, and maybe that's why the oil only gained just over $1, because U.S. stockpiles are starting to really grow again, and that has been the competitive influence that has been really pushing oil down, no matter what OPEC has wanted to do. OPEC production down more than 1 million barrels a day from where it was, so they're managing to hold that. But that's all market manipulation. They need the money desperately. They somehow are going to have to leak that oil out, and that's why they start cheating. And that's why we don't think oil's got a lot more to go on the upside. Analysts coming out looking for $70 on oil. It seems very far-fetched, possible, but kind of doubt whether or not it can get those kind of moves in there at all. We're going to be back with 16 stocks for the best and worst for the week. All right, for the best for the week, we have our usual stocks that we look at out of our 400 symbols. We look at about 320 stocks and about 80 futures ETFs. So we have a huge universe that we do analysis on, and our core analysis is on 80 stocks, and our members, who are our level 4 members, get our charts on those 80 stocks. That's level 4. Our level 3 members get our rankings and trade setups, and our level 2 members get our whole video library, and level 1 members get rankings and trade setups and our ETF report. So if you're level 4, you get all of that, all of our charts and everything. These are 4 different very interesting and informative levels, and no matter what level of trader you are, no matter what amount of experience you've had, this is really a great opportunity to do a tremendous amount of learning about analysis in the markets and trading and just financial markets markets just across the board. So you want to try us out. You can get a 1-month membership trial for half price on any of those levels at all. All you have to do is write to me, Slim at askSlim.com, or go to our site and click on Contact Us and ask the support team for the special links. Each of those links will take you to the information page, and then you could look at those and compare and sign up for the one that seems the best fit for you. If you are really early in stages of learning about the markets, level 2 is just an unbelievable opportunity, because you're going to be able to get our whole library of 400 videos plus our stock index report and ETF report. So much learning that you can do there for a month for $18.50. So that one is really a feature. I mean, if you're really a student of the markets and really want to learn. So great stuff there. I think it's really a great opportunity. Half price, 1-month trials, all of them. Just write us, ask us for the links, and you'll be able to look at that information and decide if you want to sign up. Please do. All right, so now let's take a look at our best and worst stocks for the week. The best stock for the week clearly is Anadarko Petroleum. The stock surges 33% on a buyout bid. Take a look at this pattern. This is really, a great chart to feature cycle analysis that you can see in here, and how cycle analysis is very key to understanding chart formations. Take a look here, and you could see this base that formed here, where you had this, what we call a right-hand translation. The cycle peaked on the right side and then barely came down. That's this cycle right in here, the black one. The blue one in here is the XLE, the energy. So you can see how it lines up nicely with energy. Positive cycle, positive cycle, positive cycle. But note what happened in here. This cycle didn't get as high, and that's how it formed the Head and Shoulders top. When that formed and broke down, it gave us a measurement down to this red line right over here, and you could see it got down below that and was perfect. Now you built this base again, and who would have known that, I would turn bullish in here for sure, but who would know that all of a sudden there'd be a bid and take this stock out? Oxy supposedly has got a $70 bid above the CVX bid. CVX getting hit and Oxy getting hit today on this, but they both want to move into Anadarko is basically oil shale and liquid natural gas. So they want to expand more into those areas, so that's why they chase this stock. 33%. Man, this stock was trading in the 40s, and all of a sudden it's up in the 60s. It is just amazing. There was no way to tell that was coming, but we did have a base building in here, so that's really interesting when you look at that. Great looking chart, big gain in there, and this one probably will be coming off the list. Either CVX or Oxy is most likely going to be able to buy this one out. You just watched the opening to the askSlim Market Week show. To watch the full show, just become an askSlim free member. It includes my analysis on the best and worst stocks for the week and my short-term view in 5 major markets for the coming week. You're going to learn a ton about charting, technical analysis, cycle analysis, my unique way of looking at charts, and we show lots of ideas that may bring some great setups for you going forward. Here's what's in that great offer that I think you're just going to get a ton of benefit from. You're going to get the full Market Week show. You're going to get Market Week archives, the special videos from our premium library, sneak peeks to great new products coming up, and all kinds of things along the way that we're going to put in there that you're going to enjoy. All you have to do is become an askSlim free member, and there is no credit card necessary. Please do join and take advantage of that and watch the rest of the show.